Okay, hello. This is one I'm excited about, and it's one I've been wanting to cover. And it's one I could have almost covered a couple times on the NASDAQ, except as you know, the NASDAQ hasn't bounced high enough to make a megaphone. Not lately, but at first it was. It was drawing megaphones. Now, this is a 7-day chart. Pardon the lameness, okay? I realize it's not candles or nothing. This crypto, man, it's hard to find a good chart. Even the Yahoo chart, which I'm not saying Yahoo's good, but that's a line chart as well. It's not candles. But we'll just work with it because I'm not going to download a bunch of crypto apps. I'm not buying back into this until it hits 1 cent or sub 1. Okay. Now, I've cut out 6 days of this 7-day chart to illustrate a point. Now, I can go to the month chart and I could draw a bigger megaphone. All right? Now, I can start from the beginning of this chart, the 7 days back, and I can still draw a megaphone. This currency, DOGE right here, this crypto, is drawing megaphones. Megaphones is an exciting one. That's why I was kind of excited when I started the video, is because they just have a cool name and they look cool. They really do. And they're violent. The ups and downs. It's up 40% one day, it's down 50% the next, it's up 60% the next, and down 70% the next. Now, if you followed me there, then you saw where I was going with that. Each day I was saying it was down 10 more percent than it even started before it went up 50%. And that draws a megaphone, and what it is the price is going up to new highs and down way low, and then up even higher than it went before, and then down even lower than it went before, and then up even higher than it went before. I'm sorry for the lame explanation. I'm a simple guy. I don't claim to be a genius or anything like that. It's the best way I can explain it. And what it does is it draws a megaphone. And these will continue to draw megaphones. And what a megaphone signifies is the end of a run. Now, a great example is pull up the SPY, which is the S&P 500. It's non-biased. I'm not having you pull up the NASDAQ or anything crazy like that, all right? Because the NASDAQ just crashed. But the NASDAQ drew great megaphones, okay? Now, the SPY crashed as well. It was a bleed. They were both a bleed. The NASDAQ didn't crash like it could. I'm talking about .com. Open up SPY. Go back to the year range 98 to 2001. From especially in 1999, if you zoom in on that year, you'll see it. The SPY megaphone for a year before it started down and bled off into nothing, which they called a crash. .com was not a crash. .com was a slow bleed. There's been 2 crashes in recent history. I've studied on this. There's been a third that's borderline, okay? The third I'll talk about first. That was like 1970. That was the oil embargo. The market semi-crashed. It was pretty violent. You didn't want to be long, I'll tell you that. The late 80s, 1988, I believe. They call it Black Monday, I think. Don't quote me. Okay, I'm not good on details, I'm good at like the story of what happened, not the details of what happened. That was a crash. Those guys lost everything overnight and the next morning. It was like it crashed overnight. It was like a limit down type situation followed by a real crash. And they didn't have circuit breakers in place like they do now, which the circuit breakers don't help because they just stopped trading for 5 minutes first and then 10 minutes and then 15 minutes. I'm pretty sure it's 10 minutes and then 15 or 5 and then 15. I don't think there's 3 tiers. And then the third time, they just stopped trading for the day. What happens is even the third halt, even when they stop trading for the day, people set an alarm for 4 a.m. the next morning and sell first thing pre-market as soon as their broker will let the order go through. Okay, these circuit breakers and stuff. I'm sure you guys have watched GME. It's had a lot of circuit breakers. Those aren't manipulation, by the way. Those are actually built like circuit breakers. They're built, it's like a fuse in the computers on Wall Street. You see those smart looking people walk around with the tablets. Those tablets interact with the more sophisticated computers that track every stock traded on the NYSE. And otherwise, I mean, those computers track OTC. And when something falls a certain percentage within a certain time frame, boom, it flips the breaker and it's halted. That's not someone stepping in for manipulation, okay? Now, they'll halt going up too. They'll halt over and over again going up. I don't know if you guys have ever seen a stock that's gone from like $2 to $80 in a day. That's happened. Those things halt like 6 times on the way up. And no one screams manipulation on that day. The shorts are like, thank God you halted it. And then as soon as they unhalt it, it continues right up again. And the shorts continue to get slaughtered. A halt on the way down, if anything, helps along. But I've gotten off topic. But it's not really off topic because there's been a lot of halts with Doge. With the big fall from 70 to 40 or whatever, there was a lot of halts going on during that. And the halts are probably a good thing. The halts probably kept you from going lower. But halts are not going to stop a megaphone, okay? The good thing about a megaphone is if it keeps megaphoning, you could get out high, all right? You can get out as high as it's gone, if not higher. It's gone to 70 or so. It'll probably go to 75 or so if it continues to megaphone. And then it'll crash back down to 40 or even lower. It'll crash to 30 next time, okay? So if you know it's a megaphone and you got balls, you could play a megaphone for a week. You could play a megaphone for a month. And you could buy really low lows. And you could sell really high highs. Myself, I'm a sub-penny guy. I just bought a 000, 0002. For considerable cash. I bought like a few million shares, okay? So I'm risky, dude. I got big balls. I got bigger balls than most, and I'm greedy too. I want that big I want that 1,000%. I want to go from 0.02 to 2 cents. You know what I mean? I want that 1,000%, or that 10,000% even. But I would stay away from a megaphone. I would definitely stay away from a megaphone, because megaphones, where I learned this is technical analysis of financial markets. by John J. Murphy. It was written in the 80s, I think, or the late 70s. He was talking about megaphones back then. Megaphones have been going on forever. Oh, and then, by the way, I didn't have to mention the third crash. That's Black Friday. If you went back to that chart even, if you could find a good chart from that era, they're hard to find because the street likes to wipe away bad history. Did you know that the Dow Jones, most of the Dow Jones went to zero on during that crash? That crash had 7 false pumps over the next year. It had 7 times where the market started to pump considerably and then crashed even further. And it lost 90% of its value. All the stocks combined lost 90%. Most of the Dow Jones, which were electric companies, railroad companies, oil companies, went to zero and were removed. Of course, the Dow added whatever survivors there were, right? Because the Dow was a SPY. They added whatever survivors after and made a new Dow, and then those grew. But if you really track the market, okay, it died in 1929. Pretty much any stock, it didn't matter what you were in, you died, okay? Most of them went zero and got delisted, which means there wasn't reverse splits. There may have been, I mean, even if there was reverse splits back then, I doubt it. They would have reverse split and then still continued to zero. They would have reverse split until they didn't have enough market cap to reverse split anymore and then continued to zero. That's what happens. It was that bad of a crash. It was, actually, it was people were storming the banks. The banks actually went broke, too, during that crash. Everybody that had any stock went broke. Margin was involved, okay, which means you could actually margin for 1,000% back then. If you had $100, you could margin 1,000 off of it. So all those poor bastards needed in 1929 was their stocks to drop 10%, and they were zeroed out, and their stocks fell more than 10% on that Black Friday. By margin rules today, let's say you're 50% margined into something, you're 50% cash, you only need your stock or whatever to fall 50% and you're zeroed out. And if it falls 51%, you now owe money. And these stocks don't like stop at 50% and wait for you to cover. They just go ahead and fall 60%. They don't care. Now you owe $5,000. Stuff like that happens. I see a catastrophic event coming, but probably not till like the next administration. And if the next administration is this same administration, then I don't see the crash happening either. I don't see it for like at least 4 years, 8 years maybe. But it will be that kind of situation in the stock market, which is scary. It'll be that kind of situation with stocks. I see that situation right now in the crypto market. I see crypto Megaphone, and I see crypto is I see it crashing back down. I'll invest low again. I'll sell too soon again. I won't hold long enough. I'll do all the wrong things and I'll make 1,000% again because I'm patient.